Chairman and CEO, Rudi Fronk. Rudi, go ahead.
Thanks for the introduction, and thank you for attending this presentation. Just a reminder that I will be making forward-looking statements during the talk. So why Seabridge? Well, three things that I can list very quickly. One is the unparalleled leverage we have to a rising gold market. We have a 21-year track record showing significant outperformance in our shares relative to the gold price and other gold equities. Second, we own 100% of the world's largest undeveloped gold project as measured by gold reserves. And this project has also gone through the environmental assessment process with permits in hand. And then on top of that, tremendous capital efficiency in terms of the economics we can showcase for KSM. And last but not least is our success at finding gold. Our team has found more gold over the past 15 years than any other gold company on the planet, and that does include all the majors. And we now have 3 new projects to play with, any one of which we believe can be a company maker in its own right. When we formed the company in 1999, our goal was to create what we thought would be the best leverage play to a rising gold price. And we do that through the pretty simple business plan of growing ounces in the ground faster than shares outstanding. And as you can see here on this long trending graph here, we've delivered on that concept. In fact, at the end of 2019, with 63 million shares outstanding and about 123 million ounces of total gold resources, it meant that each one of our shares was backed by about 2 ounces in the ground. That's 10 to 20 times more gold ownership than anybody in the business. And that does not yet include the 46 billion pounds of copper and 600 million ounces of silver we have above and beyond our gold resources. And what this has translated into is significant outperformance as the gold price moves higher. You can look at the long trend since we started the company in 1999, our relative performance during that time period, or shorter periods of time when gold is in a bull market. Most recently, since the downturn in COVID, our shares have once again risen to the top in terms of outperforming gold and other gold equities. If you believe that the price of gold is going to go higher, Seabridge has a 21-year track record of showing significant outperformance relative to gold and most other gold equities. We have a portfolio that's fairly concentrated in 2 geographic locations, the United States and Canada. When we formed the company in 1999, we wanted to avoid political risk, so this is our playground. Our advanced stage projects include KSM and Courageous Lake, and our earlier stage exploration projects include Iskut, 3 Aces, and Snowstorm. KSM is a project we acquired from Placer Dome in June of 2000. If you fast forward to today, we've now spent over $300 million defining what is the world's largest gold and copper project as measured by gold reserves. We've also taken this project successfully through the environmental assessment process, having permits in hand. And to get to the point where we are today, we have impact benefit agreements in place with the Niska Nation and Tahltan Nation. KSM is located in the middle of the Golden Triangle, just south of the Red Chris mine and the Galore Creek project that now contain majors Newmont, Teck, and Newcrest. A big advantage to us over the past few years is the amount of infrastructure that's been put in place with other people's money. When we bought this project in June of 2000, infrastructure really wasn't available. If you look at it today, we now have a major highway just to the east of the project, Highway 37. Along that highway, the government of Canada and British Columbia has spent over $700 million bringing cheap hydropower to the area. We've now secured through contractual agreements with BC Hydro 250 megawatts of power from that line that'll supply our mine. We will be able to buy off the grid for about 5 cents US per kilowatt hour, some of the cheapest power in the world. And last but not least, just to the south of us in the town of Stewart, we now have 2 year-round port facilities that will allow us to bring supplies in and concentrate out on an annual basis. We are blessed with tremendous quantities of resources at KSM. Our 4 deposits now host over 7 billion tons of resources that are either constrained by open pit shapes or block cave shapes. Contained in the 7.6 billion tons of resources, we have about 107 million ounces of gold, 46 billion pounds of copper, and about 600 million ounces of silver. As we went through the environmental assessment process at KSM, we are now permitted for a tailings facility that can hold about 2.4 billion tons. So even though we have 7.6 billion tons of economic resources, we've been looking at what is the best 2.4 billion tons that can fill that tailings capacity and drive the best economics. In 2012, we finished our first pre-feasibility study, which was used to apply for our permits. We did receive environmental approvals in late 2014. And in 2016, we updated the pre-feas to incorporate changes that we agreed to during the environmental assessment process, and obviously as a result of changing metal prices over that 4-year period as well. That updated pre-feas captured 39 million ounces of proven and probable gold reserves and just over 10 billion pounds of copper. And if you look at the all-in costs of production here, including the upfront capital of $5 billion, the sustaining capital over the 53-year mine life, the closure costs, the reclamation costs, and the operating costs, net of copper and silver credits, the all-in cost of production is about $670 an ounce. And that's using a copper price at about $2.75 per pound. So an okay project in terms of returns, obviously a lot of margin there at today's gold price of $1,900. But as good as that mine plan is, it's gotten a lot better. Subsequent to 2016, we've now had the opportunity to showcase what the inclusion of Deep Kerr and Lower Iron Cap could mean to the project. These two deposits have added over 40 million ounces of gold and nearly 30 billion pounds of copper that were not yet included in the pre-feasibility mine plan that I just showed you on the slide before. We just filed a new mine plan in 2020 called our 2020 PEA plan, and at the same time reinforced that the 2016 PFS is a still valid development scenario. The updated mine plan, however, again limiting ourselves to the 2.4 billion tons, still captures over 40 million ounces of gold, but instead of 10 billion pounds of copper, we're now capturing over 19 billion pounds of copper by bringing the Iron Cap and the Deep Kerr into the production mix through large block caves. If you look at the updated mine plan and the economics associated with that, as a result of the additional copper that this project will now produce and at the same throughput, the all-in cost of production has dropped from about $670 an ounce down to essentially zero, meaning that in this mine plan, the copper and the silver generate enough revenues to offset all of the upfront capital, all of the sustaining capital, all of the closure and reclamation costs, and all of the operating costs. So essentially, the gold essentially comes out for free. And obviously, as you would expect, as we're now looking at metal prices much higher than what our base case was, the project improves dramatically. We've made it very clear from the beginning that we do not intend to build and operate KSM ourselves. In fact, we believe there's less than 7 companies in the world today that have the technical, the financial, and the social wherewithal to build a mine the size of KSM. Our goal is to joint venture this project with one of those majors. Our goal in a joint venture is to hang on to a meaningful interest in the project while minimizing our capital spend. We have received a number of proposals over the past several years that we've said no to. We only get to do this once, and it's got to be on the right terms with the right partner. We do believe now, as we go forward, however, as a result of the dwindling reserves, especially in the gold industry, that's now being spoken by Barrick in particular, as well as the increase in metal prices we're now seeing both in terms of gold and copper, our time is fast approaching to get a deal done that I think will be well waited for and create a lot of value in our share price. Our second most advanced asset is Courageous Lake, located in the Northwest Territories. We purchased this project from Newmont and Total in 2002. The project is situated just south of the Diavik and Ikati mines in the Northwest Territories. It is logistically challenged. We do have a large resource here. Resources at Courageous Lake are in excess of about 11 million ounces. And in a 2012 pre-feasibility study, we captured about 6.5 million ounces in reserves at a grade of about 2.2 grams per ton in an open pit configuration. That 2012 study, however, was done at a time when the Canadian dollar was essentially at par with the US dollar and a gold price at about $13.80. And if you look at the base case economic projections from that 2012 PFS, you see a project, quite honestly, that is fairly marginal. However, if you then take those same numbers and incorporate a more realistic exchange rate and a higher gold price, what was a marginal project back in 2012 looks very different today. Last year, we also took another look at this project in terms of, is there a smaller, more robust, less capital efficient project that we can develop? And we determined that there is. We are now evaluating the best path forward to unlock value from this asset to our shareholders, which could include us doing work on it ourselves, moving it forward, a joint venture, or perhaps a potential sale. So stay tuned on Courageous Lake. Now turning towards our exploration projects. We acquired the Iskut property by acquiring a public company in 2016 called Snip Gold. The Iskut property is located only about 40 kilometers away from KSM. In fact, we believe that Iskut has the same type of opportunities that we saw at KSM when we acquired KSM from Placer Dome in June of 2000. Iskut is a large porphyry system. There's a small resource there already with gold and copper. We've spent the last few years looking at what is the best opportunities for larger scale exploration at Iskut, and have determined that there is the potential to find gold, copper, porphyry deposits in our claim block. This year, we went with our first drill program to test our concept of the porphyries. We have not announced the results of that yet. We are fairly excited, though, in terms of what we've seen in terms of evidence that we are on the right area for a gold, copper, porphyry. And we expect to announce the results of this drill program in the next 30 to 60 days. Our second exploration project is in Nevada called Snowstorm, a project we acquired in 2017 from John Paulson. This is a project that is situated on the intersection of the Getchell Belt, the Nevada Rift Belt, and the Carlin Belt, just north of the Twin Creeks and Turquoise Ridge project. This is a project that when we bought it, we recognized that it's going to be multi-years of exploration to really hone in on what the opportunity is here. Obviously, the reward is large if we can find it. If we can find another Twin Creeks and Turquoise Ridge, it would obviously have a meaningful impact on our market. We are now starting our second drill program at Snowstorm. Last year, we did enough drilling to confirm that we're in the right rocks with the right structural elements and the right alteration patterns. We now have our second program underway. Our goal here is to find a Twin Creeks or a Turquoise Ridge. Obviously, finding a deposit that close to existing infrastructure that's now part of the Barrick-Newmont joint venture would be a big win for us. An acquisition we completed just recently is a Three Aces project located in the Yukon by buying this project from a public company called Golden Predator. We paid 300,000 shares, granted a 0.5% royalty, and agreed to future conditional cash payments if we are successful. Calling this a project is not really appropriate. This is a district play, 350 kilometers with 35 kilometers of strike length, with gold showings up and down the entire belt. If you look at some of the historic drilling that was done at Three Aces by Predator Gold, you can see numbers here that are eye-popping. Right near surface, multi-meter intercepts of pushing an ounce per ton and even higher. We are now in the process of upgrading the existing exploration cam that came along with the acquisition, with the anticipation that we will have our first drill program at Three Aces in 2021. So what's going to drive our share price higher in the near future? Well, clearly the gold price. If we are now in an upward trending gold market, which we believe we are, our shares will do what they've done over the past 21 years and go higher. Getting a deal done on KSM. We know that that's the most important element of our business plan. We've been working diligently on that for a few years. We have gotten close a few times over the past. We believe now that the market environment is moving in our favor, where we can get a deal done that we can say yes to. And then last but not least is continued exploration success. We have built this company through exploration success. Our team has found more gold than any other company on the planet over the past 15 years. And we now have 3 early stage exploration projects to play with, any one of which we believe could be a company maker. This is also a company that has very tight insider ownership. Insiders own over 30% of the stock. We are dual listed on the New York Stock Exchange and the Toronto Stock Exchange. A market cap today of about 1.3 billion US, 1.7 billion Canadian. Only 67 million shares out today and 70 million fully diluted. I think that's what we're most proud of. After 21 years of being in business, having a share count of under 70 million shares, we believe is quite a testament in terms of how we've been effectively able to manage our capital structure and deliver on our concept of optionality and leverage to the gold price. So with that, I'd be happy to answer any questions.
Thank you very much, Rudi, and that's a great overview. Perhaps let's start with I guess that second element or third element of value creation you talked about, the exploration success. Obviously, you had active programs this summer, both at Iskut and Snowstorm. When can we be expecting some results from those two properties?
Yeah, so we just started drilling at Snowstorm, and at Snowstorm, what we're doing is we're going down with a RC rig first to get through the tertiary cover, and then we'll convert to a core rig once we're into the zone of interest. That program just started, so with backup and labs that we're seeing now, we're probably looking at towards the end of the year to really effectively put out news in terms of what this year's program found. Iskut, that program is now done. We are still waiting for a bunch of assays back from the lab. And we expect to be able to report to the market over the next, within the next 60 days in terms of what we learned this year and what might be the next opportunity to pursue based on this year's success.
Yeah. You're not the only company complaining about the backups at labs. I can tell you that for sure. A question from the audience. Can you speak to your efforts to electrify I'm presuming the KSM mine plan? To take advantage of low power prices and potentially avoid the BC carbon tax at KSM?
Yeah, that's a great question. I mean, we are fortunate that, well, first of all, we're producing not just gold, copper, and I think as Robert Friedland has talked effectively, copper is now a green metal in use in a lot of, electric powered vehicles and other applications like that make it more environmentally friendly. But in the case of the updated PEA, we did electrify in the current plans, the block cave at Iron Cap, which reduces our need for diesel. Being able to use, obviously, hydropower from the line that's already there is a big positive in terms of carbon footprint. And then on top of that, if you look at, we have to manage a lot of water flows at KSM as well. In our design, we put some mini hydro stations in there that actually can generate upwards of 20 megawatts of power during peak flows. So we recognize that carbon footprint is a big issue here, and that's been factored into the development of KSM to try and minimize that and build what will be the largest mine ever built in Canada.
Yeah, I guess finding a green way to produce a green metal in copper. And I think that's important. When you are building the largest mine ever built in Canada, having that green approach makes a big difference. I guess one follow-up question. You've talked about potentially looking at alternatives for Courageous Lake, and maybe give our viewers a little bit of color as to what you think that JV or spin out or what that kind of looks like to Seabridge, and what you're kind of looking for on that project.
Well, one of the ways we've been able to minimize dilution over the past 20 years is actually when the market is strong and there's demand for assets that we would consider non-core. We've been willing to sell those for cash. You look at Courageous Lake as an example of an asset that was just sold recently, is the Blackwater project that was sold by New Gold that fetched a pretty healthy price, as well as New Gold keeping a stream on that asset.
Right.
If we can get that kind of valuation for Courageous Lake on an asset today that's probably valued at zero in our portfolio, it would make a lot of sense to do that, and that would give us a lot of powder then to put to work where we think we can get the best bang for the buck.
Right. Yeah, and I think that's you guys have done it over the years. When I spending the time looking at Seabridge's history, and everyone should do this, but the number of projects that you've owned over the years that are in the process of becoming mines or are mines now is actually impressive. You're a good buyer and a good seller.
Yeah, well, the other thing, those mines that we've actually sold or optioned out, we've also kept either future cash payments due at us or at our election to convert them either into streams, royalties, or net profits interests. So it's not like we sold them with no upside. We sold them with a retained interest in the project that gives us further upside if and when they become mines. And that's been a big part of our strategy. To put it simply, we buy low, we sell high, and when the market is quacking and we have a non-core asset that can fetch a good value in the market, we'll do that sale and then redeploy the proceeds from that sale back into where we think we can drive the best value to our shareholders. And as I said, we're excited now having 3 early stage exploration opportunities where we think we can drive considerable value as we go forward.
Especially right now at the start of what you and I agree is a new bull market in gold. So. With that, I think we're out of time. Thank you very much, Rudi. I really appreciate the presentation, and I continue to learn a lot about the company, and I hope our audience did as well. And thank you to them for attending.